yangu ilienda.
Na unajua I told you to do something but nikangoja but it's okay. Ni hali
Ilikuwa
tu.
imebaki $2 iende. Ilikuwa imebaki $2. Ilikuwa imebaki $2 ikaenda.
Overall
Lakini
ama kwa daily loss.
overall
Kwani ulifanya namna gani?
nilikuwa niliingia na lot size ya 1 kwa gold.
Au profa amewezi kuallow uweke lot size ya 1, maximum inakuanga ni 0.25.
Nilikuwa nimeweka
Faith usijali
nilikuwa ni
tumepitia yote. Faith,
yes.
you are not alone. Hata mimi ni last week batwa nilifanywa hivyo. Tunajikaza tu tunaingia tena.
Hakuna ku give up juu pia last week pia mimi.
Yeah, don't give up.
Si niliwaambia last week nilichoma pia account ya 7500 ikiwa live.
Pole.
Unajua nani Steve after ile payout imekuja, unajua account iliongezewa sasa ikakuwa ya 7500. But tunapambana. Kuna ingine niko nayo, lakini leo nilienda asubuhi nilipiga matope hapa nikaenda loss ya asubuhi hapa. Kuna mali nilipiga matope nikaenda loss ya $170 but I believe nitairudisha tu. Vile market ilikuwa inacheza asubuhi ilinikulisha matope. Young Khalifa uko aje?
Niko poa.
Then kuna anaitwa aje? Kuna huyu nani mwingine hapa hivi, Masese. Uko aje Masese?
Niko poa.
Ya pia mimi niko fiti.
Niko poa kabisa.
Asijui kwa nini nimekuwa na ujinga like na kuja kuingia market Asian session. Asian session ndio imeni fuck bwana. Hata na last week tu. Sijui why. Na si trading Asian, mostly na trading in London. Cause tell me why. Hii ni ile setup nilituma ya kwanza. Hii ni ile ingine nimetuma around saa moja na market imeshuka over 200 pips actually. Sasa baadaye after hii imecheza cause imeenda more than 350 ndio nikaanza kusema si hata ningengoja tu. But anyway, ni hali ya soko. So guys, let's do this. Let's do this. Let's go. Let's check on mambo na entries. Remember we were on chart patterns. Last time we were looking on chart patterns. So today we will be looking on chart patterns as well. But leo tutakuwa tunaangalia what? The last time we checked on reversal patterns. So today we are going to be looking on continuation patterns. We are going to be looking on continuation patterns today. Then once we are done with chart patterns is when we can go to something like we can go and look on something like what? We can check on liquidity, and then we will check on fair value gaps as well. Remember we started by looking on market trends because I told you the trend is your friend. If the market is in a downtrend, you have to look for more selling opportunities, you know. Yeah, so we can get started. Let me finish something I'm doing here. There. Okay. Which pair am I gonna use? Okay, let me use this one, Euro USD. So we have said that today we are going to be looking on what we call continuation patterns, and as the name suggests, continuation patterns they show what? Trend continuation. Continuation patterns, they show that the trend is continuing that particular direction. So the first one, and these are common pattern which will get it in most of the setups, is what we call a bullish flag. In a bullish flag, the market will buy impassively, and then after that impulsive buy, the market will start doing what? The market will start correcting towards where it has come from. Sawa. And then after that consolidation, the market will break out and continue with what? It will break out and continue with the buys. So when you check on your chart, well, you will see the market will be playing inside this kind of what? Kind of a channel. Like the market is in a buy, but utapata there inside there is a small what? There is a retest. And one thing you need to note is that as the market was moving strongly, you will get that we had a resistance somewhere. We had a resistance zone somewhere. So as the market was going up, impassively, you will get that the market did what? The market broke out the resistance. So what is happening here? The market is coming back for it is a break and retest, a simple break and retest. But now that now gives us what we call a flag, a bullish flag, because the market will not just drop straight as it was going up. It's very rare for the market to make two impassive moves. So the market will correct and come back to this. So now you have to wait for the market at a key level, and in most cases, if it's a bullish one, it has to be a demand. It was initially a resistance, but now it has turned to a support since it's already what? Since it's broken, it has turned from a resistance to a support. So after the breakout, you wait for the market to come back there, and inside that channel, market will give you a reversal pattern, and in most cases it will give you a double bottom. Then now once you have that kind of confirmation, you can do your thing. Once you have that kind of confirmation, now inside the channel, market gives you something like the market gives you a double bottom. You can now enter the trade, and once you enter the trade, let's say you have entered the trade there, that was your first entry. Market will go up. Then after the market breaks out of this channel, there's always high probability that the market will do a retest. There's always high probability that the market will do a retest. So
Retest.
yes. So upon the retest, you can now take a second entry and do what we call layering. You can take a second entry upon the retest after the breakout. After breakout, you can take a second entry. Have I not my screen? I'm sharing my screen. Let me stop, then I share again. But I guess it's only on your side. I don't know if there's anyone else having the same challenge. Anybody having the same challenge?
Iko sawa, screen iko sawa.
All right. So let's continue. So I was saying you have gotten your first entry here on this double bottom. So the second one you get it on this what? Break and retest. And then your overall take profit is where that channel began. That can be your overall take profit, or when we learn about liquidity, because this will be a sell side liquidity there. And when we learn about FVGs, maybe you can get that slightly above. We have a fair value gap, so you can have them as your targets. This second entry you can target. You can have your target there first, and then the earliest entry, you can have the target at the fair value gap. And let's say you have a small account, so you entered only one position. If you entered one position, you just keep holding this trade. What you will do after the market moves to this level, you now take your stop loss from below the entry to somewhere above the entry a few pips. That is now what you hear people say, that you set your stop loss at break even, so that even if the market now fails to buy after the retest, then it decides to come back, you are going to be stopped out, yes, but you will be stopped out in what? In some profits. Have you guys gotten that? Have you understood a bullish flag and how to trade it? I've said market will go up strongly, and then it will start correcting, coming back from where it was. And what will happen there? Market will have done what? Market will have broken a strong level. And initially the level where the market will have broken, it was a resistance. Then after the breakout, it becomes a what? It becomes a support. So you wait for the market to come to that zone, and then inside now the correction which the market was doing, look for a reversal pattern. We learned about reversal patterns last time, and in most cases the reversal pattern you are going to get here is a double bottom, the W formation. That is the commonly pattern you are going to be using. So double bottoms and double tops are very important. Number two, now that was a bullish flag. Let's go now to a bearish one, a bearish flag. Let's have a look on a bearish flag. So on a bearish flag, the market will be selling, market will be dropping, then it will come to a point, then the market will now start doing what? Up and down. Market will start correcting towards the area where it has come from. It will be correcting all the way to where we have a zone. Then at a time the market will now decide, let me do a breakout, let me break out. That's why you have seen me recently, I have been emphasizing most on telling you that the market moves in impasse, which is the strong move you can see, and then after an impasse the market will make a after an impasse, market will correct, and then it will continue with that impassive move or the strong move towards one direction. So we are here on a bearish flag. So where will the market be going? Initially, you will get that now the zone we have here, it was what? It was a support, right? But since the market during this time when the market was coming down, initially you get that this was a support. So market was coming here, going up, come here, go up. But this time around, the market was very strong, so it broke out. So after the breakout, market will be coming for a retest, right? So you wait for the market to come to that zone, and inside now the flag, the correction channel the market will have, you will see that we are going to have a double top or the M formation. So this is going to be our first what? This is gonna be our first. This is gonna be our first top, and then the other one is gonna be the second top. The second top. Then after that, the market will drop. The market will now drop impassively. So I've said the first entry will be there. We're gonna have the first entry here, and then after the market goes below this, after the market now goes below this low, you will wait for a little bit of a retest. After market breaks that, it will come back for a retest there. Now you can have entry 2. You can have the secondary entry upon what? Upon the retest there. Then remember where we have the overall take profit is where that channel, where you started to draw the channel. That is where you are going to have your overall what? Take profit. But if you have the two entries, that will be the take profit for entry 2 and then the overall TP. But you can have it there as well, because if you do good calculations from where you had the first entry, the market would have gone for more than 300 pips. We are going to confirm that from the charts as well, so that we will not be just talking and talking. I used to call them stories za jaba kitambo while I'm teaching. I just used to say geni nikawapigia stories za jaba, you know. Yeah, so guys, this is a bullish flag, this is a bearish flag. Bullish flag, bearish flag. Bullish flag signifies buys continuation. Bearish flag signifies sales continuation. Now, we are done with that. Let's have another we have some other chart pattern here, and in this case we are going to be looking on what we call a bullish rectangle. So if it's a rectangle, market will be giving us equal highs and equal lows, equal highs and equal lows. So the consolidation will be happening in equal highs and equal lows. Then after that consolidation is over, eventually the market will do what? Eventually the market will do a breakout. So we are saying it's bullish. So the market is coming from the lower side. It will do that consolidation, giving us equal highs, equal lows, equal highs, equal lows, and then it will do a breakout, a strong one actually. That is what we call an impulsive breakout. Yeah, and as I've just told you, double top and double bottoms are very, 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 very important. So you can see this is how it is. And in most cases, if you are taking this bullish rectangle, what will happen? Market will manipulate after, because the brokers will have known most retailers are not just buying here, are placing their buys there. Their stop losses are just slightly below. So market will manipulate, come to a fair value gap somewhere. We will be learning about fair value gaps later. Market will do what? Will come, take out those early buyers, and then it will continue with what? It will continue with now the direction. So in most cases, when you take your entry there, you can target the liquidity up there as your TP, or if you have an FVG above or any other key level there, you can target there. So this is what? This is a bullish rectangle. That is a bullish rectangle. That is a bullish rectangle. That is a bullish rectangle. So you open another position for the second trade ama una hold from the previous one. So number one, it will depend with your account size. Kama account size yako iko sawa, you can open two positions. That is entry one, then you will have a second entry. Again, in this case, kama this one, there are guys who will decide if a market is coming to do a breakout here. That's when you take an entry there. And why can you take an entry there? Because you already have the first entry. So the first entry is already in profits. So the second entry is gonna be what? It's gonna be secure. In case the market decides now I'm getting back to the consolidation, you can decide now to close your trades, right? Yeah. So that was a what? That was a bullish rectangle. Let's check on a bearish one. A bearish one, market will be coming from the upper side, or the market will be selling, and then it will start giving equal highs and equal lows. You know, market will give us equal highs and equal lows, and then afterwards it will eventually break out very strongly or impulsively. The market will eventually do what? The market will eventually break out. Who is this having a lot of noise here? So let's continue with what we were doing. We were on this bearish rectangle. So as it happens with the bullish rectangle, market will do a manipulation. So it will swipe upwards or to the upper direction, and then after taking out or sweeping liquidity, it will start doing what? It will continue with the sales. So already I've told you 4 chart patterns, and these chart patterns are very crucial. More so if you are trading gold, master these chart patterns and go and confirm with gold. Gold respects these chart patterns like shit. Same to Euro USD, GBP USD, the Japanese yen, almost every pair, even Bitcoin. These are the things I use. I don't use anything different from what I'm teaching you. Right? Now, let me go to the last ones, which are now the triangles. We have triangles. So, let me start with a bullish triangle. So, we have different, what do we call them? For triangles, they can appear in different shapes or models, but they are all in for one purpose, to show a continuation. We have what we call a symmetric triangle, so that's what I normally call them. The one which will be kinda contracting, we'll get it something like this. We'll get it something like this. It will be something like this. Yeah, it's gonna be something like this. It's gonna be something like this. So this one is a bullish one. This is a bullish one. And as it is with the flags, you will wait for the market to come to retest at a zone before you take that entry. In most cases, what will happen now, market will do a manipulation and come to the zone, and then it will continue what? It will continue with the buys, right? That is the first scenario, or how it can look. Sometimes it will come and look like it will come look like this. It will come look like this, and then it will continue. So when it looks like this was a possible rising wedge which failed. Remember, we learned about a rising wedge in the previous session. So once it fails, it becomes this kind of what? Kind of a continuation pattern. It becomes like that. So just check on what the market is doing. First, the most important thing is to check on the market. Where is the market coming from? If it's from the lower side, whatever it is forming there is bullish. So it's gonna show you that market is possibly, or it has high probability of continuing towards that direction. So let's look on the last one, where the market is coming down, and then it starts and then it breaks out. So on this, you will be having something like this. So this one now is a bearish what? This is a bearish rectangle. This is a bearish one. We have a bullish one. So I believe you are getting it. And trading it, you need to check for a zone there before you take an entry. You need to check for a zone. So these patterns have to be formed at zones. Zones are our key levels. Zones are the key levels we are checking at. So these ones have to be formed at those levels. So we have done the demonstration part. Let's have a quick look on the practical part of it, and then we can call it a day. Let's have a quick look on the practical part. Let me just have my chart on line graph so that we can go very fast. So first, let me start with one here. This one. Market was selling and then it started going up and down. So what did the market form? The market gave us which pattern? Somebody, which pattern did the market give us? Which pattern is this? Yo man, which pattern is this?
That's a bullish flag.
No, no,
That,
no,
yeah.
not bullish.
A bearish flag.
Yeah, sure. This is a bearish flag. And you can see what the market has done. Where the market has reacted at, if you check well, this one here, you can see the market has been facing several rejections there, right? We had this, the first rejection there, we have another one, we have another one. So you can see it was a strong what? It was a strong area. Then the market reacted from there and it sold. Now, when the market started selling, remember we said we are targeting what? We are targeting where you have started drawing that. Okay, we normally call this a 90% rule. 90% rule, which states that the next impulsive move should cover at least 90% of the correction. So the moment market was trading inside the channel where it was going up and down, that one we term it as a correction. So once the market makes a breakout, it should cover at least 90% of that correction. And that is now where you started drawing what? The correction. You can see what happened there. Let's say now you got your entry here. How many pips were those? You will see. So that's how you backtest, you get to understand a pair well. So that when you come across this kind of thing in the future, you know what to do. So one thing you need to know, if it's a bearish flag on Euro USD, like this one, it has given us 22 pips. We have another one here. We have this one, which is in the larger version of it. This one. I hope you can see. And again, you need to learn and understand the behavior, because you can see when the market is crossing here, it does not give what? A retest. It is very impulsive. So that means if you are to take an entry, you have to place something like a sell what? A sell stop after you have gotten your entry 1. So entry 2 has to be a sell stop. And you can see the market breaks directly to take profit. Let's come back to this. You can see this. You got your entry there. If you check well, you are going to get that it was a strong zone. You check well, you see that it was from a strong zone as well. You can see it was from a strong what? It was from a strong zone. So let's say now you got your entry from here. Remember our target is what? 90%? 90%. Where did you start drawing that key zone? Here. So that was to be our target. And this one you can see now is giving us 28.9 pips. The first one was 22. This one is giving us 28. That means when you come across a flag on Euro USD, you can target a minimum of 20 pips. I don't know whether you are understanding something like that. Sorry, I don't know whether you are understanding something. So if when it comes to now, when we hear people say backtest, I don't know what. This is what you normally do so that you can understand a pair very well. Another flag is here. This is a bearish flag as well. This is another bearish flag here. So you can see the market came to a zone, right? You can see after market made these strong sells here, after market dropped here, it came back to this zone and then it made another strong sell. So let's see how many pips did it print. So here is where we had our 90%. 90% was there. Now we took our sales there, targeting 90%. In this, you can see we have how many? 24.8 pips. So one thing we have known is that, and what we can conclude, when Euro USD gives us a flag, the market will give us a minimum of how many pips? A minimum of 20 pips. You have seen most are, we have 24, we have 28, we have 22 from the three flags you have checked on. Am I making sense, man? I don't know whether whatever I'm showing you is making sense. Again, come here. When you check on this, market has been forming what? Market has been trading now inside what? Market has been trading inside what we call what? A bearish what? This is a bearish rectangle. Because you can see market has been giving you what? Equal highs and equal lows. It was from the upper side and then it started giving you equal highs and equal lows. What happened next? It made a strong what? It made a strong breakout. And in this case, what you are to do now for the target, you are to check on the order block there or the fair value gap. That could have been your target or your take profit. So all these things you are going to learn them for those the ones you don't know. Now we have checked more on the bearish ones. Now let's check on this. These are bullish one. These are bullish flag. Yeah? These are bullish flag. These are bullish flag. You can see. This is a bullish flag. This is a bullish flag. You can see it, right? You can clearly see this is a bullish flag. Now, check where the market has come to react at. We have had a strong zone there. Market has made several rejections. You can see here. It was a strong what? It was a strong zone. It was a strong zone. So, let's say you got your entry from here. It's a long, it's a long. So you got your entry from there and you targeted 90%. Let's see how many pips were those. So that is where we have our 90%. That's where we have our 90%. So those were 50 pips. So you can see now for the bullish flag, the market is printing how many pips? 50 pips. And remember I told you about the chart patterns. Look at this, market came down, it went up and then came down, then it made a sweep. So what did the market form? Is this not a double bottom? This is a W. And what is a W? A W is a double bottom, right? Yeah, guys, I hope I'm making sense. I hope whatever I'm showing you is making sense. So you need to go and start looking for those things on your charts. The things you have learned. Today we have learned 6 patterns. Practice them. Check them on your charts. Practice them. Because those are the things you are going to be using each and every day. Those are the things you are going to be using every day. Because now, let's say like this bullish flag. Let's say you trade Euro USD. You have come across these bullish flags with double bottoms. Like how many times? Let's say it's 20 times. You have checked on the charts previously 20 times or even 50, and you have come to find that when you have this kind of a pattern, market will give you 50 pips. So you know once you take a trade like this, your target is 50 pips, or you can say let me target 40 and not the 50. I don't know whether you guys are understanding something. That's why you see that in most cases when I give you gold trades, I'll tell you target something like DP1 target 50 pips, or you know, yeah, because I know what I'm telling you. I know it's something I've been doing. This is a flag. We have a flag here. This was a flag. When you check after the market made that sales, let's say you even got the sales from this high here, which is the zone. This is a bearish flag. This is a bearish flag. So you got now your sales here. You did not get them up there. You came and got them here. Target 90%. This one is going longer. It's giving you around 50 pips. Can see here. So guys, work. Whatever I have taught you today, take your time, go to your charts. It doesn't matter which chart it is. Go to any chart. Let's even check on NZD/USD. Whichever chart you go to, just go and try looking for those things. We have a very clean one. This one. This is a very clean one here actually. This is a very clean. Which pattern is this? Which pattern is this?
A bullish flag.
Yeah, sure, this is a bullish flag. And when you check inside the bullish flag, you can see the market has given a double bottom. Market came down, went up, came down, and then you can see what it has done. It has given a double bottom, and market has gone up. So let's say now, for the double bottom, you can see this is where we had the strong zone. This is where we had the strong zone, right? So let's say you got your entry. You had your entry here. You are targeting what? You are targeting the 90%. This is it. This one, you can see this one is 40 pips. You can see even the time when the market came back, market went up to almost TP. But now when we come to learn about fair value gaps and order blocks, you will understand why you could have taken your profit what? You could have taken your profit there, which was around 36 pips, and that is okay. Then you can see market came back to the entry, and after that it went up all the way and it even the take profit, right? Yeah. And for currency pairs, the stop loss is always very because like this stop loss, this is 11.9 pips. This is 11.9 pips. So we just check on this. Yeah. There's another pattern we have learned, and this is when I'm coming across it. This one. This one. Which pattern is this? You can see. You can see this pattern, and I believe on the lower time frame, that's when the market gave a double bottom inside here, somewhere here in a lower time frame. What happened? After that, market broke out and it went up. So you can see for this one, if you are to target the 90%, it could not be so many pips. That's why you get that if you are trading currencies, you use a bigger lot size so that you can get some reasonable profits. But now since the market had gone up to this point here, for me, since I understand liquidity, I will target that liquidity now as my take profit, and I will have made double what I could have made if I targeted the first point, right? Yeah, so guys, practice what we have learned today. Just take your time, practice what you have learned. You can see they are here. Another one is here. This is a bullish one. I've told you these things applies to every pair. It doesn't matter. They apply to all pairs. And inside here we have a double bottom. Keep practicing. Your eyes are going to get used to it. You see, market formed a W here. You could not spot it at first, but the more you keep practicing, the more you will become good at it. The more you practice, the more you become good at it. That's simple. Because now you could have gotten your entry there, you go up, you target some pips there. That's 30 pips. You saw that the first one gave us around 36 pips. This one is giving us 30 pips. So with this you know that if we have a bullish flag, in most cases on NZD/USD, the market will give us a take profit of 30 what? Of 30 pips, right? Lucho, you are talking about break and retest. Break and retest is still okay, but that one applies on zones, where we have zones, strong zones. Those are now the demand and supply, or support and resistance. So guys, that's it from me today, man. I'm tired. That's it from me. So see you in the next lesson. I'll update you when. Yeah, the reason as to why I had this lesson today is because I told you as from tomorrow I might be a little bit committed somewhere. Yeah, so you can see another one is here. This is another flag. Market made a strong move. Market did a correction, and then from there we can see another strong move. So it's very simple. Every time market makes this strong move, market will do a correction. And I've said, don't enter the market when the market is in a strong move. Enter the market when it's in a consolidation, so that when the market decides to make a strong move, you are already in. That's simple. So guys, that's it from me, man. That's it from me today. See you